All right, let's begin. Good afternoon, Checkmate Trading Crew. Today is Wednesday, July 27th, 2022. It is FOMC Wednesday today, all right? That should maybe we see some crazy price action. Who knows, right? We might see some things, but I think today try to manage your positions and just manage your emotions. Okay. Usually, I will say this: the first move is not usually the real move when it comes to FOMC. Okay, and I went over this in the last meeting in June. It may not be a bad idea to just pause and not trade even after FOMC for the rest of the day, because sometimes, for example, when the announcement, the rate hike, it all comes out at 2 in the afternoon here in New York. So by that point, Asia is already closed. Europe is closed. Asia's, already asleep. So it's not like as if they're like staying awake just to, listen to this FOMC. Maybe there are some people that are like that, but, for the most part, most of your professionals are not going to be awake. At least the ones that are overseas, your European and Asian professional traders are not going to be there trading this. They're probably going to read about it and trade it after they get back into the office the next day. So sometimes we don't see the major move until the next day. Sometimes it takes a whole rest of the week and over the weekend to see the real move starting on that Monday. Okay, so again, don't be surprised if you see that type of crazy price action. That is normal during FOMCs. Okay, sometimes you don't get the real reaction until a little bit later on. All right, so keep that in mind. Because it is FOMC, I just want to go over what the rate probabilities are. Let me just pull that up right here. Okay, so this is a rate probabilities for this FOMC. It's 75 basis points. There's about 76% chance that is what's gonna happen. So most of the time, the Fed follows the market. So if the market prices that in, that's what usually the Fed does. Okay. I don't know if they're going to be a little bit bearish or hawkish or dovish, but if I were, just based on this, if I were a gambling man, I would say that they are probably going to start pivoting dovish. Maybe not this one, but maybe the next one. Then there's no FOMC on August. There's one in September. August they have the Jackson Hole Symposium. So this one or next one, I think that they're going to start pivoting. Okay, we will see. Okay, we shall see. Most likely next one, because we haven't had a low inflation reading yet. But we'll see. Okay. So that's the FOMC stuff and the interest rate stuff. Okay, so today I said I was going to go over earnings as well. Okay, so first things first, let's go over TXN, all right, which is Texas Instruments. Texas Instruments had a phenomenal, let me say that again, phenomenal quarter, okay? Wonderful quarter. So let's just do a little history lesson here. Maybe a couple months ago, maybe in the beginning of the quarter, they came out and they guided their earnings expectation for this quarter, this past quarter. They guided it lower. They lowered it by $500 million because of the supply chain issues in China, because of all the COVID lockdowns. Okay, so they dropped their expectations down. Now, in the past month and a half, there have been some reopenings in certain areas. And so Texas Instruments, they were able to move a lot of that supply in the last month and a half. And immediately they said that after they started moving supplies around, immediately their customers came and filled up all those orders. So they, so there was, I think, on their earnings, they guided 500 million lower, but then they overshot it by 560 million. So all of that, all of those earnings that they were guiding lower, basically they made up and more. All in, like, I guess in the recent in the end of the quarter there, okay, because of the reopening in China's and strong demand from their customer base. And they mentioned the auto industry as one of their strongest customers. So it looked, when we were talking about a potential lowering of guidance, Texas Instruments said, what lowering of guidance? So they came out with strong guidance as well, too. They have a new plant that they're going to open pretty soon. They're building one right now in Sherman, Texas. It's for their 300 millimeter semiconductor wafer fabrication plant. And so, they're going to be able to increase capacity, and they're increasing capacity here in the United States. So they actually see that as a big driver of revenue growth going forward. And so they came out with some decent guidance. And again, the expectation right now is for weak guidance. That 5% was that we talked about for the past couple of weeks. That's a Wall Street consensus, 5% lowering of guidance. All right, so we haven't seen that yet. Okay, so it looks like and it doesn't look like all semiconductor companies are made equal. Okay, I think there are going to be some semiconductor companies that are having some pricing issues and supply chain issues, and their costs are going to be out of control. But that did not happen with Texas Instruments. Actually, when they looked at their cost expectations, I think their costs came in about 1% higher. 1%. It was like something like that. It's like 1 or 2%. It was single digits, very low. Okay, so they were able to control their costs, and they probably also have pricing power. All right, so they have pricing power and they can control their costs. That sounds like a wonderful business to me, and demand is still very robust. They did, even with their guidance, they included problems with currencies, with the strength of the dollar. They included also their own expectations for lower demand in consumer electronics. And even still, the guidance came out really good. All right, so that is what happened with Texas Instruments. And as you can see, Texas Instruments rallied today, as well as most of the semiconductor space. Semiconductors are up about 2.5% today in sympathy. Okay, this is SMH, which is the Van Eck ETF for semiconductors. We had a semiconductor play as well, Taiwan Semiconductor Manufacturing. They're also up in sympathy with Texas Instruments. It is not quite at my $89 two standard deviation Bollinger Band level. However, I did take a new trade. I did, and I posted this on our Discord. It is EWT, which is the Taiwan ETF. 25% of this ETF is Taiwan Semiconductor Manufacturing, and so I'm just using this pop as a good way to enter into this. It's a very lower IV because it is an index ETF. It's a low IV alternative to playing, semiconductor, to play Taiwan Semiconductor Manufacturing as well as Taiwan in general. Okay. Also, the reason why I wanted to take this was because we saw some weakness in the Australian dollar. Okay. Well, I'll get to that later on. Okay. But right now we're just talking about earnings. But again, all the semiconductors are up in sympathy for that. Okay. So again, it's about what the market expectation is and what people are positioned for and what we get. Market was positioned for lower guidances across the board, especially from semiconductor manufacturers. But but that's not what we got from Texas Instruments. Okay. And I in my opinion, though, I don't think all semiconductors are going to have results like Texas Instruments. I think Texas Instruments is one of the gems in the industry. I think some semiconductor companies like NVIDIA might have some issues. Okay. To be continued. We will see what happens to NVIDIA when their ER comes out. Okay, so that is TXN. Let's talk about now the other two tech earnings that we've had: Google and Microsoft. Okay, now let me tell you, Google. They grew. I think the slowest. This was one of their slowest growths ever. Okay, what investors liked about it, because we are seeing it up, is their growth in their Google Cloud business. All right, their Google Cloud business went up. Their revenue went up 36%. Yes, it still made a loss, about an $858 million loss, but it's always been at a loss. I believe last quarter was an $890 million loss. Now it's like 850 or so, but the revenue went up 36%. So it is a fast-growing segment. Also, too, they saw a little bit of growth in Google Ads and Google services. One of the interesting, actually, you guys, I recommend you guys go over the Google earnings. There's some actually really interesting stuff. It puts a little bit of color on also the U.S. consumer. One of the things Google mentioned on their earnings release was that one of the most searched topics on Google search was restaurants around me that are open. Okay. Also, a lot of summer vacation searches. They saw a huge rise in that. I forgot what the order of magnitude was. It was like either 300 or 400% increase in people looking for summer vacations and looking for air trips and looking for motels. I'm not sure if that's the right scale, but they did say it was some number X increase. All right, so the consumer, it sounds like, it's very strong and is willing to spend money. Okay, they're willing to spend money on restaurants. They're willing to spend money on vacations. Okay, keep that in mind. Keep that in mind, because that theme is pretty common. Okay, another theme that's common that you want to keep in mind is, they had all this revenue growth. Maybe muted in some parts. I think their YouTube section, they saw a little bit, they're seeing competitors taking some of their market share away, like TikTok. But they did mention that one of the things that was keeping their EPS down was their R&D expenses and their general expenses, which include human capital. Labor costs, okay? Labor costs. They had a hiring binge for the last year, and they did announce that they will be slowing down their hiring. They didn't say they were going to stop. They did not say they were going to stop. They did not say layoffs. I've already seen articles in the media saying that there's layoffs in tech companies. Okay, I don't know what tech companies they're looking at, but they did. I saw one article that included Google. That is false. Read through it. I have the transcript downloaded here. Okay, they did not say anything about layoffs or reducing headcount. They actually said what they're going to do was decrease the rate at which they increase headcount. They still said that they were going to hire certain top technical and engineering talent, but they were going to do less of it going forward, okay? Going forward for the rest of this year and next year, okay? Actually, they said mostly it's for next year they're going to slow it down. So it doesn't even sound like they're going to slow it down for this year, all right? So that kind of gives you an idea, labor costs, okay? And so with companies like Google, Microsoft, Amazon, they live and die with talent retention, okay? So for them, retaining that talent and making sure that they have fresh talent always coming in is a cost of doing business that they have to bear. Okay, so it's only natural that their labor costs are going to be high. All right, and they're in growth mode. They are trying to expand. They're definitely trying to compete and take market share in their Google Cloud business. Okay, I think that's a huge focus for them right now is Google Cloud, and that requires a lot more new engineers and a lot more new technical staff. So I do think that they're probably for Google Cloud, they're going to be hiring more and more. But I'm sure that they're going to slow down in some of their other areas of the business that are not producing as much. I know Waymo, they're probably going to be hiring more in that and some of their newer ideas. The Waymo is one of their self driving app. But I'm sure for maybe Google ads and things like that, they'll probably start tapering off hiring in those areas. Okay, so hiring slowdown doesn't mean they're stopping, or that it doesn't mean that they're laying off. So that's for Google. All right, Microsoft. This one, and as I expected, okay, what have I been saying before? You know, some of you guys who know me from the previous Discord know, you guys, I've always talked, before a couple months ago, I used to always talk well about Amazon and AWS. But for the past couple of months, I've been saying, it's especially since after the last ER, not the one that happened yesterday, but the one that happened in the last quarter, I said Microsoft is going to take their lunch. Microsoft Azure is going to take AWS's lunch, all right? And I think that's what we're seeing. This quarter confirmed that Microsoft, a whopping 45% increase in their Azure revenue. I mean, that is amazing. That's an amazing increase. And that is what sent Microsoft higher, okay? They, too, also, have some costs, especially when it comes to labor. But they did have good growth, all right? They did have some good growth, and it doesn't look like as if their guidance was all that bad, okay? They did mention that they did have some challenges, especially with foreign currencies, with the dollar being so high, but guidance, it wasn't particularly all that bad, and they did say that the retail consumer may be spending a little bit less, but all their business applications, their enterprise solutions, they had robust growth, and they see that continuing going forward. Okay, so guidance wasn't so bad. Again, the market was pricing in, I think, too much of a guidance cut. All right, and since we didn't get that much of a guidance cut, and guidance is still very much, still decent, and plus we had this huge 45% growth in one of their future areas of their business. This is great, and actually one of the pieces of news that was really great too was they actually signed up $100 million plus deals with large enterprises. So they did mention that from one of their top competitors, they were taking clients. They were literally taking clients from one of their top competitors. So they had multiple 100 million plus deals signed this last quarter. Okay, one of the bank analysts asked, "Hey, with what's going on in the macro environment, can you explain why or how Microsoft got those 100 million plus contract deals?" All right, and Microsoft pretty much said it the same thing. In the end, companies are trying to save money. Yes, the macro environment is such that they are trying to save money and trying to really protect their bottom line. And that is why they're spending money on all these solutions, okay? And all these intelligence cloud solutions, all right? It's to make their workforce more efficient, be able to do more with less people. And how are you going to do that? You got to use technology for that, okay? So, it looks like that's going to be a source of huge growth for Microsoft, okay? This concept, keep this in mind. Companies are trying to save money on their labor costs, and they're spending money on technology to do that. Now let's go to some other industries. Let's go to Coca-Cola, and let's go to McDonald's, okay? First of all, Coca-Cola, wow. I mean, talk about an expert management team and a class act when it comes to management. I mean, Coca-Cola, wow. I mean, these guys are an all-star team, okay? All-star team. Not only, actually, James Quincy, he also has a sense of humor. He's the CEO of Coca-Cola. It was really funny. A Goldman Sachs analyst asked him, are there any projections for how bad you think the economy could be, or how bad this, global recession could be? and and what that would do to your bottom line. Have you all modeled the worst case scenarios? And James Quincy had a really smart comment. He actually used the word zoom out. He said, hey, we've been through recessions before. If you zoom out and look at the big picture, we've weathered all of this. Which is funny. A person that makes soda is telling a Goldman Sachs Wall Street banker to zoom out. I thought that was kind of funny. That's pretty funny to me. But anyway, Coca-Cola, I mean, again, that's another earnings report or earnings call that I recommend you all listen in on or read the transcript. They talked about the consumer in America, domestic, Europe, Middle East, Latin America. They talk about all of these international markets, okay? And what's really funny is they mentioned that in Europe, that they have much larger inflation problems in Europe than here in the United States. One of the things that Coca-Cola mentioned in their earnings was this idea of their platform for revenue management, okay, revenue growth management. I believe they call it RGM. So if you look at their earnings transcript and their call, they keep using this term RGM, okay, revenue growth management. Their revenue growth management technology, all right. They are also now using technology to better target certain markets, okay? They use, a lot of these companies, especially like companies like Coca-Cola, they use price discrimination. What is price discrimination? Basically, in economic theory, in industrial organization, which is a sub-study of economics, price discrimination is charging each consumer a different price. It has nothing to do with like, oh, we're gonna discriminate because we don't like them or because of a negative bias or anything like that. It has nothing to do with that. It just means that for different customers and different consumers, there are going to be different prices. This happens all the time. You go to, for example, here in Los Angeles, if you go to the grocery store, same chain in Beverly Hills versus near, let's say, LAX, you're going to get totally different prices, all right? Zip codes can be a determining factor. It could also be the demographics of the local neighborhood, or it could be, like wholesale versus retail. Are these buyers buying in bulk in bundles, or are they buying individually? So there's all this, there's this idea of price discrimination, and they are using this all over the place. Coca-Cola is using this, okay? So one of the things that they were able to monetize on was in some markets, and one of the examples that they used was in India. They're able to, charge different prices based on whether or not they get, a single drink versus a multi-pack, okay? And these kinds of factors, this use of technology was what really helped them have a record quarter. They had great revenue growth, and they guided even higher. Okay, so they're able to pass on the costs to their consumers, but at the same time, they're also able to grow their consumer base and their revenue base by using more targeted advertisements, using more targeted digital channels. All right, and this way, based on demographics, based on different local tendencies, they're able to market and brand certain drinks and food items and increase sales that way. Okay, so that is, again, a use of technology that really helps them, beat their bottom line. So again, remember what I told you about people spending more money on technology because they need to, make up for revenue for all the cost increases. So Coca-Cola probably turned to, I don't know if Coca-Cola actually uses Microsoft or Google. I have no idea. But if Coca-Cola is doing this, you can bet all other companies are thinking the same thing. All these CEOs are probably thinking the same thing. We have to be more productive. We have to get more productive with what and do more with less. And one of the best ways of doing that is using better technology. All right. So I think this is going to be a common theme in the next couple of quarters. As long as the consumer is strong, and as long as the consumer, as long as companies can pass on costs to the consumer, they're going to find ways to leverage that and as well increase their revenue base and get more productive using technology. And so I think there are certain companies that are going to benefit from this. Microsoft, I think, is going to still, have good quarters going forward. And so I think this is a tell, with these companies using that technology. So again, Coca-Cola doing more with less, raising their guidance. Again, we were expecting guidances that get lowered. Now only about 20% of the S&P has reported earnings. So it could very well be that the rest of the 80% guide lower. But extrapolating from what we've seen so far, that doesn't seem like the case. I mean, it seems like banks lowered it, but that's because the 10 and 2 year spread is a negative. So of course then that's obvious. But with these consumer brands, hey, it doesn't look like it. Okay, it looks like they're doing very, very well. All right. Next, McDonald's. Same thing. McDonald's using technology. Digital channels. They came out with an app not too long ago, maybe a couple quarters ago. They had something like something in the tens of millions. I think 22 million active app users. Here in the United States. They're getting more of their sales through the app, through digital channels, and through delivery. Okay, so they are, and kiosks, okay, so they are trying to do more with less. They are upgrading their stores so that they can operate with less people. Okay, so this, again, they're spending a lot more now. They're spending about 10% more on technological upgrades. Okay, again, I don't know for sure who they're using. Are they using Microsoft? Are they using Google? Whoever it is, we can see this is a trend amongst big companies. They're using more technology. Labor costs are going up, so they need to save money on labor. How do they do that long term? They invest in technology. Okay, so this is what we're seeing. Now, commodity prices, yes, those are going up too, but there's less options for that. If people want beef, they're gonna need to get beef. Okay, it is what it is, right? They are hedging though. They are hedging for that, for increased prices. And McDonald's said that they expect their commodity costs to keep increasing, at least for the next few quarters. Okay, if not, maybe even for the long term. They said that they don't expect their commodity prices to come down anytime soon. Okay, so that's the McDonald's, management team. They're saying that, and I agree with that. And that's, and if they had said something like, oh, we expect, we expect commodity prices to come down, maybe then I would have had a little bit of a worry of our plan to buy PPC. But as you can see, PPC is coming down already. I do still think that meat prices, commodity prices are going to keep increasing for these food companies. And so McDonald's kind of confirms that. Yes, they don't expect this to come down. If anything, they actually expect it to go up. But luckily for McDonald's, they're also able to increase their costs. Also, another way they're using their digital platforms too is for certain demographics. They're able to pinpoint who their lower income demographics are, and they've been targeting them with more of the value menu, those $1, $2, $3 menus. And they said that they've seen an increase in sales in the value menu at certain low income demographic locations. Okay, so they are using more targeted, advertisement, using that digital technology. And again, I think companies are spending money. They're ready to invest. But they're not investing in the same things as before. They're investing now in technology. It's a shift, okay? The market is shifting. And this is a trend we've seen now for a few years now, but I think it's accelerating now. Because labor costs are going up, the pain of not upgrading becomes that much more. So I think whenever we see this volatility, waves of volatility, and if you are trying to find a stock to own long term, I think Microsoft and Google are great companies. I mean, just from earnings, it just the moral of the story here, Microsoft and Google, if tech as overall sells off, those two companies, I think, are solid revenue earners. Okay, solid. All right, and they have really great growth prospects, especially I think Microsoft. All right. Now, Microsoft is a little bit expensive on the expensive side right now, especially after this rally. So, again, wait for those pullbacks. And if you're a long-term investor, okay, we talked about building a long-term portfolio, right? I haven't forgotten about you guys, those guys looking for long-term plays. But I think Microsoft is a beautiful long-term play. If you've got, so to wheel this stock, you need about 26 grand, 100 shares, to sell a put and sell a covered call after you own the shares. So, you need about 26 grand for that. So if you've got an account size for it, I think this is a wonderful thing. If you're not into options trading anyway, and you're not going to be wheeling, you're not going to be selling puts for assignment and selling covered calls anyway, hey, starting a small position in Microsoft and building it over time, over a decade or two, I don't think is a bad idea. This company is going places. And Azure, I think, is going to be number one when it comes to intelligent cloud solutions. Okay? They're going to be number one. All right? They're going to take Azure's, they're going to take Amazon's place. Oh, which reminds me, that goes to my next point. Mickey Blindside, yours truly. I rarely do a DGen play. I hate weeklies, and I don't like to do zero DTEs. However, this is one opportunity that I think is worthwhile. Amazon. What if we buy some 2-day puts? All right. I think Amazon might be a good play for the downside. And here's why. I think their AWS is going to underperform. It's going to underperform when you see 45% from Microsoft and the business as a whole went up, like, let's say, I think it was like 30-something%. That means they took somebody else's market share, okay? And the fact that they took clients, $100 million plus contracts makes me think that they're taking it from Amazon, okay? I think Amazon reports earnings tomorrow after the bell. Tomorrow, I may try my hand at a put spread, a put vertical, okay? So tomorrow, right before the bell closes, I'm going to go for a put vertical. I'm going to try to get at least, 4-to-1, 5-to-1 reward to risk ratio on a put vertical spread. I mean, if I were to wanted to do it now, let's say the 115. Hold on. What is the 115? 106, 115, 110. Let's say 115, 110. What does the 115, 110 pay? 113 right now. That's 113. So that's what, 3-to-1 reward to risk? Yeah, that's 3-to-1. A little bit better than 3-to-1. I think there's a very good chance that this rallies tomorrow because everybody, all the DGen gamblers are thinking, well, all these other companies guided well. Amazon must be doing well too, and they're gonna push this up maybe. And when that happens, this might be $1 or less, the 115, 110 put spread. Again, I'm gonna decide what that is, and tomorrow I'll let you guys know which one I choose on Discord. I'll alert everybody which one I choose. But this looks like a good play. I think Amazon could sell off after the ER. I'm willing to bet a little bit. Lotto play. It's a lotto, okay? Well, I mean, when do you hear me do one of these DGen ER plays? But I think I like that. I like this play. Again, very small lottos, zero or hero. Okay. Sounds pretty good to me. So okay. So that's a little DGen play for you guys. Okay. We've got. Yes, so we got about an hour and a half before FOMC. Hey, guys, let's take a look at our data. Let's just do a run through our indicators and our data, and then we will call it there. But let's go over some of this stuff. Okay, guys, big picture. we are seeing a little bit of a rally in stocks. Let me just show you the big picture chart here. All right. Let's see. ES still on a downtrend. We're up 1.47%. Okay. But again, the major trend is down. I'm neutral with a slight bearish bias. Okay. I am going to start legging in some puts around here. It depends on the dollar, really, and the dollar just keeps going up and down like crazy. Sometimes it's over its 18-day moving average, sometimes it's not. Let's see where it is right now. See, right now it's over its 18-day moving average. Okay, it's over its 18-day moving average. So if that's the case, I may start buying puts a little bit earlier. If it's over the 18-day moving average and we still rally in the S&P 500, I'll start buying puts at 41.50. If we're under the 18-day moving average and we're in a downtrend, I'm going to start buying puts 3 to 6 month put vertical debit spreads instead around 4,300. Okay, so it really depends on where the dollar is. If the dollar is above the 18-day moving average, we're doing 41.50. If it's in a downtrend and under the 18-day moving average, I'm doing 4,300. Again, put debit spreads 3 to 6 months out. That's the plan on S&P 500. Okay, but again, I just want to show you the major trend. It is down, but we are seeing a little bit of a rally. Okay, I think most of the strength today is in tech. All right, is in tech. Yes, tech is at almost 3% today. Wow. Remember yesterday I said I might have sold puts? Man, I should have done it. I should have. Those puts are like 30% decayed. They were like 400, 500 points. That would have been an easy 100, 150 points, which would have been like $280 a contract on the micro futures or $2,000 on the big boy futures contract. Oh, well, shoulda, woulda, coulda. Okay. Let's look at our indicators here. TIP, TLT. Okay, again, this is our inflation indicator. This is what the Fed is really looking at right now. If this keeps going down like this and hugging that lower Bollinger Band and really starting like to tank, that's the bond market telling the Fed that they need to hurry up and start cutting rates. So if you see that, if you see this TIP TLT chart just riding down its Bollinger Band and just really tanking, you know, basically the bond vigilantes are having a tantrum and they're trying to send a message to the Fed. All right, so beware of that. The dollar. Let's look at the dollar futures. That dollar that I showed on TOS, that's the dollar index. This is the dollar futures. Again, it's up. If you look at the euro, we are still under the 18-day moving average on the euro. So most of this gain is actually in the dollar is coming versus, a lot of it is actually coming from emerging markets, some of it from the euro. But for a rise like this, you know, we probably wanted to see this go down a little bit more. If this keeps going down more, our FAZ spreads are going to do quite well. Okay, they're going to do really well, actually. All right. If the euro goes up, okay, if the euro goes up and dollar comes down, the reason why I'm telling you guys that, you know, we're going to go to higher levels is because if you price the S&P 500 to euros, that's the ES futures contract divided by the euro USD, we're already above the June highs. We're actually breaking out above June highs. Same thing with the NASDAQ. If you price it in euros, it's breaking out to the upside. Okay. So if the euro goes to 106, 107, oh yeah, we're definitely going to like 13,200, 13,300 on the NASDAQ. And for the S&P 500, definitely we can get to 4,300. Okay, because those are the levels that correspond on the S&P 500 euros chart. Okay, but again, the euro has to go up and the dollar has to drop in order for that to happen. If the dollar doesn't drop, then no go. That's not going to happen. Okay, so the market will tell us which way it wants to go. Keep an eye on that dollar. All right. Some other bonds, things that I'm looking at, the MOVE index, which is the volatility in the bond market, is still up. Okay. These Bollinger Bands, they're good for some things, but not good for all. Let's get rid of some of them. Okay. So the volatility of bonds is still on an uptrend, okay? The 30-year, 10-year, which is the stagflation indicator, is still stuck. It's still stuck here. If we want to see the economy, the real economy improving, we need to see this keep going up, okay? We need to see this keep going up, but we're not getting that, all right? 10 and 2. The 10-year minus 2-year, it's getting even more inverted, more negative, which is really bad for banks. Okay, really, really bad for banks. How are banks doing right now? XLF, yeah, see, XLF, everything is positive, but XLF is negative. And again, the weakest index. Oops. Oh, what's going on? Why can't I find it? The weakest index is this, the Dow. The Dow, okay. Dow is up only what? 0.41. S&P 500 is up over is 1.5%, and the tech sector is up 3%. So why is that? Again, guys, look at this. Remember this? IVWIVE, growth versus value. I said as long as this is in an uptrend, tech will outperform. Okay? Our data still wins. Okay? Using data to our advantage. All right? Now, another point of data right now, though, risk off, gold versus copper, is still giving us a risk off signal because it's still quite high. Now, having said that, July is about to end. This is kind of it looks like an exhaustion signal, does it not, on a monthly basis? So maybe we correct down. And if that's the case, and if copper does well, then I can see us having a little bit of a rally starting maybe in Asia. Definitely a possibility, but we shall see. Okay, I'll believe it when I see it. Okay, this could just be a dead cat bounce in copper, which I think actually it might be. I think this is just a dead cat bounce in copper. Time will tell. We will see what happens. Okay, so that's the data that I'm looking at right now, guys. Some of the other commodities, oil is back up again. Will we see goddamn like 110 or 120 again? I hope so. If the dollar drops, definitely it still has a chance of going to 118. I don't know. I would really love to get into some oil shorts. Like 110, 111, that would be great. Okay, but I don't know if we're gonna get it. All right. Let's look at natural gas. Nat gas on fire. Oh, it actually lost some of its gains though today. It is really on fire. I told you guys that we might see 10. You guys were laughing at me when I said, "Oh, we might see 10," and you're all like, "Oh, no." But I think it's possible. We could see 10. Actually, did we get to 10? Oh, we were less than a quarter away from 10. We practically was at 10. Okay, so yeah, right now there's a lot of fears that Russia may not turn on Nord Stream to give natural gas to Europe. And right now, natural gas in Europe is over $52. Okay, so I mean, just to put things in perspective, their nat gas is right here. Ours is at here. Theirs is at here. Okay. I think that their natural gas prices are going to plummet, probably in the winter, because markets are forward looking. So I think November, December. I don't know if you guys are in Europe, and you guys are able to buy put debit verticals on your natural gas contracts, I would seriously consider doing that. Unfortunately, here in the United States, there's no broker that I can find that allows me to do that. But if you guys in Europe, you're able to buy put vertical debit spreads on your guys' Eurozone, Euronext natural gas futures, I mean, I think that's a great R to R, great reward to risk a play. Unfortunately for us here in the United States, we can only play the natural gas, the NYMEX, the New York Mercantile Exchange natural gas futures. We can't play the Euronext. Only those in Europe can do that. Okay? So that's what I see on natural gas. That's kind of crazy. All right. And then, of course, one of our other indicators, before I forget, junk bonds. Our junk bond indicator, it's already curling down. Is it possible that we see a little divergence like we saw in June? Possible. What if it makes a higher low? I think if it makes a higher low and rebounds and makes a higher high, that's a signal that this, at least, for the next 6 months, we might have a bull market, a mini bull market if we see that. Again, I'll believe it when I see it. Till I see that, I am still, a slightly bearish, neutral to a slightly bearish bias. All right. New York high-low line, still curling down, still hasn't even flattened yet. All right. And I believe for the day, so far, we are negative. Okay. So that line, this cumulative line, is going to keep going down. And again, you want to see this curling up to even consider the bottom being in. This needs to curl up and make a higher low. And that's the only way you can really confirm that this is not some just, bear market rally where we just rally for just a couple days and it's over. Okay, you really need that confirmation here, or maybe a couple weeks. If you really want to see a sustained rally, this needs to curl up, get over all these moving averages, and then make a lower high. Make a higher low. Make a higher low, and boom, that's a very quality signal. That and the corporate bond spread making a higher low and a new higher high. I mean, that quality. If those two things go together, I mean, that's quality signal. That's a quality signal. All right. Bitcoin, Ethereum. We saw a lot of hedging happening yesterday. Lot of hedging. As far as any type of like gamma pinning or anything, I don't see that today. We actually saw speculators coming back by buying the December Ethereum calls. Okay, so we're seeing calls being bought in Ethereum. There is, oh wow, look at that. The notional value of calls in Ethereum went way up. Yesterday in the morning, it was at $5 billion. Now it's at 5.6, so another like 12% of notional value got on in the last 24 hours. That's crazy. And a lot of that is the December 3,000 calls. Okay, 3,000 and 3,500. Actually, there was somebody who put a huge vertical call spread. They bought the 2,600 and sold the 3,000. All right. And I think a lot of people saw that volume and started buying some of that 3,000 afterwards. But somebody bought 20,000 of the 2,600, 3,000 vertical call spreads for the December expiration in Ethereum earlier today in the wee hours of the morning. All right. They paid, I believe, like, I want to say they paid like $800,000 for it, for a $40 million potential payout. It was something like that. I'll have to redo the math. I'm not sure now, to be honest. 20,000. Wait, if it's $400 difference times 20,000, 480, 800. No, 8 million. I'm sorry. So somebody spent like $400,000 to make 8 million. That's what it was. 8 million. 400,000 to make 8 million. So we'll see what happens. Okay. 3,500 still being bought as well too. That's where most of your volume is today, is in that December contract. Again, I think it's a lot of speculators, big institutional block trades, big institutions, making their wagers for the end of the year. Definitely some risk on going on. Okay. Bitcoin though is not as interesting. Yeah, I mean, well, compared to Ethereum, I should say, compared to Ethereum. it's, notional value has been decreasing over time for the last few sessions. It's a little bit more mixed, trading. Actually, a lot more puts, and a little bit less block trades. Actually, more retail. So I guess retail is bearish, which kind of makes sense. Actually, right now, for a lot of stocks, a lot of the stock order flow for bearish trades, especially in certain very popular stocks, is retails and puts right now. So there's a lot of puts. And puts, risk off trade is a very crowded trade right now. And I guess it's coming from retail, both in the equity markets and in crypto. So that's funny what the mindset does. You remember in November, December of 2021, it was all call buying. Now it's like it's all put buying now. So it's almost like retail loves to kind of chase at the end of things usually. So that's why I think we're getting closer and closer to the end. I still think there's one more washout, with one more big down move, but it may happen a little bit higher after it washes out some shorts. When all the shorts are gone, I wouldn't be surprised then when the rug gets pulled, everybody, starts positioning long, boom, it goes down. Those longs get liquidated, and then really all the weak hands have left the market. And then that's when we can have this low volume grind higher in risk off assets. Okay? I can see that happening. All right, definitely within the realm of possibilities. I'm not trying to predict the future. I'm just trying to anticipate what could be, thinking 5 or 6 moves ahead like any good chess player would. All right, but yes, Ethereum, way more institutional block participation, and institutions are now positioning themselves for risk on. Okay, so it looks like institutions are in ETH and retail is in Bitcoin puts, but institutions are in ETH calls. Interesting. Okay, so that's going to be some interesting action. Man, this last quarter from September to December, I think is going to be one of the most interesting markets we've had in a very long time. I think it's going to be very, very nice. There's going to be a lot of big moves, and I think we're going to have a lot of potential trades that we can profit from. Okay. So we will see. Okay. Any questions? Comments? Rude remarks? This is your time. All right. Let me go through my plan one more time. Let's go through the plan and the major indicators. Okay, as we do. Going forward in all of our videos, always at the end, I will always go through our updated plan, and I'll always go through what trades I'm looking at. Of course, like the trades that are like low probability of actually triggering, like for example oil, I think that's a very low probability chance it's going to go up to 110 or 120, at least for this season. I do think oil will make new highs next year, but for this year I think it's a very low chance it gets to those levels. So every once in a while I might skip those. I might not go through those every day for the high noon highlights at the end, but definitely the ones that are nearer and closer to getting triggered, I'll definitely go over those on a daily basis, and I'll always go over my existing positions and the indicators that I'm looking at. Okay, one trade that I have not told you about, so let's start with trades that I'm looking forward to right now. I'm actually looking forward to XRT. Retail has taken such a beating right now. Walmart guided lower. They guided so low, and I think the reason why they're guiding this low is because for this upcoming quarter. I think what the CEO is trying to do is set a very low bar, so that he can beat it. Okay, and I think right now the expectation that retail is going to be weak I think is fully priced in. So I have all these risk off spreads. The spreads that I have all these puts and UVXY calls. So as a hedge for that, so it's a hedge for my hedge, so to speak, I may try to enter some call spreads. Actually, I already have an order existing right now. It just hasn't executed yet. It's for the September 65-68 call spread for September expiration. Okay, I'm trying to get in at 75 cents so that I have a 3-to-1 reward risk ratio. Okay, this is an existing order. As you can see, it says buy sell, so it hasn't triggered yet. If it was already if I already had a position, it would look different. It wouldn't say buy or sell. Actually, what would it say? sorry, it would say, oh, it would say POS for position. Okay, so that's what it would say. All right, so it hasn't triggered yet. Again, I'm looking for 75 cents on the 65.68 call vertical debit spread on XRT. Okay, I'm looking for that. Also, as a lotto, again, lotto, it means super small, expect it to go to zero, high risk. Okay, I might play the weekly put vertical spread. Tomorrow is the earnings after market, so I might get in tomorrow. Okay, so I'm looking for something at least 4 to 1, 5 to 1 reward to risk put vertical debit spread expiring in 2 days. Again, tomorrow I'll let you guys know which one I choose. But this one comes from the fact that Microsoft did so well. Their Azure grew so much over what the business, over what intelligent cloud services grew. And I think they're taking market share from Amazon. And I think the market will realize that and sell this off after ER. Just a theory. I have no idea. It's going to be a small lotto. I'm willing to roll the dice and accept that risk for this. Okay. So that's what I'm looking at. One of the trades that I entered was EWT with the strong earnings from chip companies. TSM moved up in sympathy. And so therefore, I wanted to take advantage of shorting TSM, which I wanted to do, but also shorting something in China, Taiwan, because we're seeing weakness now coming back into the Australian dollar. So this kind of kills two birds with one stone. So instead of looking for TSM at that 89, I'm just going to go with EWT. EWT is the Taiwan ETF. And again, this is a short on TSM as well as a short on China, Taiwan because of weakness in Australian dollar. But I have the 49.40s that I got into today, the 49 put spread. 49.40 put spread, so I'm long the 49 put, short the 40 for the December expiration. I got in at $2.05. The potential max payout would be about $7. So it gives me a little bit better than 3 to 1 reward to risk, and I have until December for it. Okay. Existing positions, UVXY, I'm still in the same positions. The 14.24 call spread, long the 14, short the 24. Also the 15.20 call vertical debits, long the 15, short the 20. Okay. I'm still in FEZ. I'm still in the November put vertical debit spreads, long the 32, short the 27, 32.27 put vertical debit spreads. Okay, I'm also in Dow Jones Industrial Average. I'm also in those put spreads for October, long the 300, short the 290. So that's the 300 290 put vertical debit spread. All right. Also part of the plan too. This is kind of a small cap long as well as a Bitcoin long. I already have some HUT shares. I've already initiated the I guess the transfer from my long-term account to my spec account. So I think by tomorrow it should be here. But I've got a couple thousand shares. I want to make this into like a 10,000, 20,000 share position. And I will be looking to do that. I have an alert set at 165. I want something between 150 and 165. Yesterday it went to like 168, 169. MSC and I, we were thinking about chasing it, and maybe we should have. I hope we see it again, though. I think we might. I think we will. So I'm willing to be patient on that. But I'll buy some more shares on this. And I'm going to sell covered calls aggressively once I get to this. The IV is really good on this, so I think this will have a good good reward to risk ratio. And again, this one I'm getting into shares. Okay, they're so cheap, I'm gonna get into shares. So that is my plan. Okay. Again, for the indices though, the plan hasn't changed for our buying. I'm going to keep buying shares at the lows, the 360. If we get to 360, I'm going to buy some shares. I'm going to start scaling into shares. I'm going to buy more at 342 and then start buying in the money 1 year calls under 340 on SPY. Okay, depending on where the dollar is. If the dollar is below the 18-day moving average, all right, and is in a downtrend, I'm going to buy 3 to 6 month put vertical spreads when the S&P 500 gets to about 4,300 or so, around here, okay? But if the dollar is above the 18-day moving average, then I'll start scaling into 3 to 6 month vertical put spreads on SPY at around 415. Okay, so that's my plan on the indices. All right. So that's the indicators I'm looking at. The most important thing is the dollar. Really, it's all about the dollar and the euro. And also take a look at our junk bonds advanced decline line and then the New York high-low line. Okay, so those are the 4 things I'm really looking at. Those are my trades, my indicators, my upcoming trades that I'm looking at. Boom, checkmate trading, baby, all in 1 hour. All right. Any questions, comments, rude remarks? This is your time. What happened? New news. Somebody said there was news today about semis. The U.S. Senate has enough votes to approve multi-billion-dollar bill boosting. Okay, so this is going to be awesome. Okay, so, actually on TXN, they were talking about this. They didn't want to speculate. The CEO said, we will change guidance if we see that passed. And when he was on the call yesterday, he said, it hasn't passed yet, so we're not going to speculate on that. Okay, so if it passes, there's going to be a few companies that really benefit from this, okay? Basically, what the United States wants to do is boost domestic production of semiconductors as a matter of national security and as well as, just avoiding these problems in the future with supply chain issues, okay? Also, too, it's also a response to, the natural gas crisis in Europe. Right now, Russia is kind of using natural gas as a way to get leverage over Europe. So the United States doesn't want China to use semiconductors as a way to leverage their international policy. So, that's why the United States is looking into this. Now, if that happens, there are some companies that are going to benefit. Those companies are TXN. They're going to benefit. The biggest beneficiary is going to be Intel, okay? Intel Corporation. So let's see where Intel's at right now. Oh, look at that. Well, I think that news must have come out, but I think it was already baked in. All the analysts at TXN, they were asking about that. The analysts were asking about it, so it's probably already baked in. That's probably why we've seen semiconductors do so well in the past few days. Now, not all semiconductor companies are going to benefit from this. I saw something where it says it's going to be Intel. I think even ADI has something here. Technically, I think Taiwan Semiconductor Manufacturing should also benefit because they have a plant here in Washington, I believe. I may be wrong about that. But Samsung, too, will benefit because they have a plant here in the United States as well. All right? So those are the companies that are really going to benefit. TXN will benefit. Intel will benefit, Samsung will benefit, and as well as TSM. Okay, the last two I'm not so sure, but definitely the domestic ones, the TXN and Intel, for sure are going to benefit. I believe they're also going to get a tax reduction as well. So that should increase cash flow. So if that we'll see if that gets baked into the next earnings. But once this passes and all that those effects take hold, that should just be even more tailwind. But I think that news is already baked into the market. I think so because we're not seeing that much of a response right now. And again, semiconductors have just been on a tear for the last few sessions. Fast couple of weeks. Look at that. Boom, 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 boom. So I think this was all kind of priced down. I remember seeing something in the news like a week ago about this. So I think the market was already pricing in that this is going to pass. Hopefully that answers your question. Coin. Request for coin. Coin. Oof. Like all crypto stocks, it's going way up. It did not have a very good day yesterday. What happened? Was there some bad news yesterday on this stock? Because all legal proceedings. Well, all crypto stocks weren't doing good in the last 3 days. but 1, 2, 3, 4, 5, 6, 7 before. So is that what? I mean, those legal proceedings probably were expected then, or maybe not. I don't know. But coin looks like it's back near its lows, while the miners are still well above them. Interesting. Maybe it was a double whammy. Not only crypto stock coming down, but they also have that legal proceedings. Probably some sort of double whammy like that. Coin. I mean, that's some pretty good IV. I hope you guys. I hope you're selling some covered calls on this. Are you selling some covered calls on this? Roku, trash stock. Okay. Oh, this is trash, dude. This is trash. This is gonna be a penny stock one day. I think Roku's gonna be a penny stock one day. If you look at the '90s during the .com, somebody asked me to look at Roku. By the way, guys, those of you following from our other channels, but Roku, you know, if you look back in the '90s, all these unproductive companies that had high valuations, guess where they're at now? You know, there are a lot of them are penny stocks. I think Roku is definitely one of those candidates. Roku can definitely become a penny stock in the next few years. Definitely a good chance. This is a very unproductive company. Unproductive. You know, losses. Yeah, maybe they might have a good quarter here and there, but you know, at some point they're going to run out of funding. The debt's going to get too expensive. Guess what they're going to do? Equity offering. They're going to dilute their shares down. That's how companies like this become penny stocks. They start issuing way too many shares at the expense of the bag holder. So don't be a bag holder in this. There's way other quality names. You're going to buy an $85 stock. There's way better stocks out there at this range. Way better. Way better. AMD, for example. Way better stock. Way better. Intel, way better option. Half the price too. Per share, that is. All right? Way better. TXN, a little bit more expensive per share. Maybe that's not your thing. But, I mean, there's way better options in tech than that. I mean, that was $80 per share? Google is not that far off. Google's not that far off, man. Buy Google instead. Don't buy trash. This is trash, dude. Come on. Unless you're a glutton for pain. You know? If you want tears in your life, go ahead. That's all I can say. Any other questions? Questions, comments, rude remarks? Ford. Oh, Ford. Beautiful company. Oh, my. Thank you. MSC. This is why I love having you around, brother. You always like to end things on a nice note. Roku, ending the day with Roku would have been a disaster, okay? Like a foul taste in my mouth. But we're ending the day with Ford. I can live with that. Ford's a great company. Great company. I think it's a wonderful company. I agree with you, MSC. I like your thesis. I remember you said that they're going to take market share from some of these electric vehicle companies. I can see that. And not only that, here in the United States, I don't know for our European friends or some of our friends overseas, but America is still very much in love with big trucks, SUVs, things like that. And especially when it comes to like those pickup trucks, Ford, you know, is number one. No matter what, Tesla can make their little stupid electric truck, but you know, really, it's people who buy those pickup trucks are usually like people in the construction business. They're they're contractors, or they live out in rough terrain. You need something that has a brand recognition for being able to handle all that workload. Okay, Ford has that brand image, built Ford tough. All right, and they make very good trucks. All right, they make very good trucks, and I don't know, are they making an electric truck? Do you know that? I try to do research on to see if they're doing an electric truck. I didn't see anything, but I didn't really do that much research. I just looked at their Yeah, I wouldn't rule it out either. I wouldn't rule it out. I really think they're going to get into that electric vehicle market. Oh, there is an electric F-150? Well, there you go. There you go. It's probably more for the urban, probably the urban contractor or something like that, probably that market. And hey, you know, with gas prices being the way it is, I'm sure a lot of construction and contractors, they're looking for ways to cut costs too. And this may not be a bad way of doing that. Okay. But Ford, I think, is an amazing company. If you're going to, you know, wheel a stock, this is another good potential one. At $12.80 a share, come on. All you need is $1,200, $1,300 to wheel this. Very good option. Very good company. Dividend is decent dividend. You know, 3%. Wait, let's. You know, I gotta look now. You know, I gotta look at this now. Good find, MSC. This is a beautiful find. Okay, so dividend's a little light. But the earnings per share is at 285. Their dividend payout ratio is less than 50%. So at least the dividend is secure. Okay, I think their dividend is secure. You know, I think it should be fine. Research team saying, don't ever believe in that stuff. These people are shit. They don't know what they're talking about. But long term, I think this is great. This is a great stock. You know, I can definitely see them taking some market share. Definitely, though, I would be selling some covered calls. If you're buying this to wheel, maybe you can start selling some cash secured puts. Let's actually take a look. Let's actually take a look at that trade, man. That actually looks like a good trade. I might even. $2022 Maverick, F-150. Oh, you sent me a link. Okay. Electrify. Oh, yeah, they're going to have it. Okay. All these electric vehicles, right? Oh, yeah. Oh, there we go. 22 F-150. I can see a lot of, you know, as long as this guy is similar. Oh, look at that. Yeah. So they make it like, you know, they made it so it's like just as good as, like, you know, a working person's truck, like, you know, a contractor's truck. What's the targeted payload? What's the payload for their normal, they're just normal F-150? Is it comparable? By the way, guys, this is the type of research you need to do. You need to research their products. You need to research their finances. You need to research everything, their options market. There's so many things you research. I research before I get into a stock. All right, so I'm just showing you guys what kind of research, what kind of homework, what kind of elbow grease you got to put into this. Okay, trading is a business. You got to treat it like a business. Okay, you know, if your money was on the line and you were starting a new business, like a new store, would you like let things? Would you kind of like wing it every time? No, you would like definitely prepare, right? And so I'm showing you the process here. If the payload is pretty comparable, I can definitely see there being some demand for this. You don't happen to have that payload figures, would you? Let's see. Hold on. Payload for 2022 F. 2,235 for the gas car. That's a gasoline powered car, right? No, I already have the electric. That was 2,000, yeah, but what about the gasoline one? Oh, it's comparable. It's 1,000 to 2,000. 1,300 to 2,200 a payload. Yeah. So it's comparable. It's comparable. Okay. Yeah, definitely. That sounds like That sounds very interesting. Oh, hybrid. No, all electric. All, all electric. Oh, yeah. Only off by a little bit. Towing capacity 10,000. Towing capacity for 2022 F-150. Gasoline. 14,000. 10,000. Compare. Okay, so 10,000 to 14,000. Okay. 2 tons. I mean, anybody here a contractor? What does 2 tons mean? I know, but I mean, but would comparably, like, is that a big difference? I don't know, Harambe. I don't want to put you on the spotlight here, but are you in the trucking business, if I remember correctly? Okay. What is 2 tons? So I mean, what is, like, average weight of a like an RV, let's say. So it can tow an RV. Oh, that's good enough, right? For urban contractors, I think that should be good, right? I'll ask around. Yeah, I'll ask around. I got some friends who are contractors and builders. I'll ask them, and maybe we can get some color on what that 4,000 pound difference would mean in urban development. For, like, who, DJT. Okay, well, we'll ask him, but I'll also ask, my network of contractors that I know. So, okay, so yeah, we'll research this a little bit more. But again, I think Ford is a great stock. It's a great stock. It's a great company, great management, and also too, I think with everything coming back, I think if the markets really rebound, I think Ford will rebound too. And if they take market share and the consumer still stays strong, and if the consumer still buys cars, this should be very good. Now, the only thing I could think of that could be a negative for this is that, I do expect the real estate market to go down soon, maybe 2024. Will that affect construction work? And will the decrease in construction decrease the demand for Ford trucks? That's something that, is worrisome on the near-term horizon, near-term being 2 to 3 years. Because when you own a stock like this, you want to own it for decades. Okay, so, if you're thinking about doing something very long-term, that's one of the worries that I would see. So if you're owning this, you really want to stay on top of earnings and make sure that they're high-ticket items and they're high-margin. I'm guessing that their trucks are going to be the more high-margin products. You want to make sure that those high-margin products still maintain demand. If demand starts waning because of whatever macro conditions, then that's your signal that you want to get out. Okay. So always keep that in the forefront of your mind if you invest in Ford. Okay. So I might even take this play myself. But we'll see. I think there's still one more big markdown in the market. If this comes down, definitely into the 12s or so, high 11s, low 12s, I think that's a very good candidate to wheel. All right, sell cash secured puts after you get assignment, sell covered calls. I think that's a beautiful thing. Any other? This was a wide-ranging high noon highlights. We talked about earnings. We talked about macro. We talked about trades. We talked about long-term strategies. What didn't we talk about today? We talked about a lot of stuff today. So today was a great session, guys. So I will put this up on our wiretap tapes. Remember, guys, we got about 40 minutes left until we got 40 minutes until the FOMC interest rates. There's staying in cash and staying out of the market is a position. Remember that, okay? Sometimes, more often than not, patience pays, okay? We don't have to chase everything. We don't have to be in everything. So take a breather, take a break. Maybe, you know, walk away from your screen today, okay? And maybe not a bad idea to do that, okay? I know that some of our members were pitching some idea about buying strangles on SPY for 30 minutes. Just be careful with that. Just manage risk, you know. It looks like you could potentially make about 30 to 50% of your spread on a 0 DTE. I'll have to back test that, but generally from my back tests of doing 0 DTE trades, your potential reward has to be quite high in order to have the trade make sense. Just because when you lose, you tend to lose a lot. You know, when a 0 DTE trade goes against you, generally, you know, you could lose all of it, you know, pretty quickly. So if you have the possibility of facing a 100% loss, and this trade is only, you know, 40% of the time it hits, then, you know, you need to at least double or triple when you win, in order to make the long-term expected value of that trade and that strategy positive. Okay, so always think in those terms. Don't just think about like one trade. I know he put out an example of one, and congratulations on that one win. You know, money is money. Hey, you know, however you trade, you know, as long as you have a sound strategy, I'm all for it. But you know, I'm just kind of interested to see what it would do over the long term. So just keep that in mind, guys. I'll start back testing that. I did go through a couple of months. I forgot which month it was, April or March. There was a month or so where it didn't work out, but you could exit for a very, very small, you know, loss. Like it was like 8% loss. So, you know, if you can consistently make 30 to 50% every time and keep your losses at only 8 or 9%, then hey, that sounds like a great trade. That sounds like a great strategy. Again, I just haven't back tested it myself. So just be very careful, guys. It is in the end 0 DTE. All right. So that comes with a lot of risks. Just keep that in mind. Okay. There's no shame in just sitting out of the market today. Okay. No shame in that. Any other questions, comments, rude remarks? Going once. Going twice. All right, sold. All right, guys, I might be back at the end of the day. I'll hang out in Discord for a little bit. I'll be back at the end of the day. Maybe I'll do another live session. Again, our Twitch stream is always on, so you can see the charts and the data that I'm looking at. And I'll post this video recording in the wiretap tapes. See you guys later.